Okay, let's switch gears now and talk about meat processing loans. And I've got to give another shout out to Robert and Susan, because they were so helpful to me and Maryland in applying for the USDA Meat and Poultry Intermediary Lending Program grant, round 2, which they were successful in round 1 with. And we just were awarded $4 million. And Robert and Susan, I don't know, I know you helped Alabama. The Alabama Ag Finance Authority was awarded a $15 million grant just recently, thanks to your help as well. And I know you received $15 million in the first round, as did Minnesota in the first round. So you guys are rock stars in grant applications. And so we're certainly looking forward to hear now about program implementation from you in North Carolina, as well as Brian in Minnesota. And Brian, you had a pandemic-related livestock processing loan program, is my understanding. You can correct me if I'm wrong about that. But looking forward very much to hearing about your successes and how you're implementing those livestock processing loan programs now. So Kara has prepared the order of as being Ryan, Robert, and Brian. We'll proceed that way unless somebody else wants to go first. So Ryan, you are up. Is Ryan still on? I see his name.
Hello, Ryan has asked me to
oh, Mary, I'm sorry. I missed that. We had Ryan listed on the agenda.
Yes, he has asked me because I'm doing the program to give the update and what we have on meat processors. So
I'm sorry, I
right.
Totally missed that. Nope. And we certainly want to hear from you. So nope. Please proceed.
Okay, all right. I'm going to be going to my website, and I did share it with everyone. This is a really new program. Like you said, we were just granted the 15 million in the first round. And I, like Jenny, have just joined the Minnesota Department of Ag Rural Finance Authority. Ryan does all of the participation programs, and I was brought on board to help him with that, and then also do this meat and poultry intermediate lending program. So it is a new program, but we have put together, of course, we got the 15 million, and I was not in the process of helping with the grant, so that's was not mine, but I have been in charge of putting out the program there. But we have, of course, what we're doing is we have the 15 million available, but we have loans up to 7 million are available at a 3% fixed interest rate with a term up to 10 years. Funds can be used to purchase land and or equipment, cover startup costs, and make other investments for expansion process. And then once the money is paid back, of course, it'll be available to the new borrowers. So, and of course, this grant is funded with a grant from USDA. So RD. Interested borrowers can call me, but our eligibility and limitations are to primary slaughter and secondary cut, pack, value process, further process, meat processors. Loans are available in the state of Minnesota. Borrowers must comply with the state of Minnesota or USDA Food Safety Inspection Service. Borrower must certify that they do not own the top 4 market share in beef, pork, chicken, or turkey processing, or if the new loan would propel them into the top 4. So loan uses, interested borrowers are encouraged to discuss their project. What we ask is they fill out an intake application, as we do have that on our form, because we do charge them $500 for an application, but not the intake application. We want to make sure that they're eligible and the actual further processing all of that stuff is actually eligible, and the business is eligible. So we contact our USDA and we discuss that with them once we receive the intake application. So once we have determined that they're eligible, the business is eligible, the project is eligible, we go ahead and tell them to fill out our full-blown application that's listed online. So again, the rate is 3%. Loan limits, minimum is a 50,000, maximum is 7 million. Collateral, we do business assets, real estate, maximum length 10 years, maximum amortization is 25. We do use business equipment, equipment and assets, accounts receivable. We're doing 5 to 7 years, but we will take a look at it to see if the equipment is a little longer. So we're pretty negotiable with that. So if you have a piece of equipment that 10 years, we'll possibly take a look at that also. So our fees are an application fee of $500 non-refundable application fee, 1% origination fee, and then borrowers are responsible for all third-party fees associated. There is an underwriting process, of course. Loans are underwritten and based on historic and projected cash flow with demonstrated ability to repay, being the primary underwriting consideration. We have listed online some required documents, but also if you go to our main application, there will be a complete and full list on that. We are required to with the USDA, so we do have their documents listed in our attachments as USDA does need them. So I guess I'll open it up, but you're welcome to go to my website. I did share it. If you have any further questions.
Mary, thanks so much for that. Did a great job. And let me, for folks that might not be clear on the USDA grant program, USDA announced last fall this new grant program to incentivize lending for livestock processing facilities. They're using the structure of their intermediary relending program, which is a loan program long existing at USD Rural Development, but they're making the funding available as a grant for the eligible applicants to set up a revolving loan program in a special way using the IRP model for the financing structure. So USDA has a role in making sure the projects are eligible, that environmental standards are followed, and that sort of thing. So it's a different thing using a model that's been around for a while. Are there questions for Mary? Okay, Mary, folks are thinking. We're going to hear from the other panelists. But before we do that, we did have a couple of folks join us. I thought I would just ask them to introduce themselves. Monty and Nicholas, do you want to say hello to the group? Just introduce yourself.
Hi. Yeah, hi, I'm Monty Henderson. I'm in Indiana. I'm actually with the Small Business Development Center. I'm the director of what we call our agribusiness initiative with Small Business Development Center. So we provide advising and such to our ag folks in Indiana, including farmers, producers, those in the food chain. So and I see Erica Heater's on with the State Department of Ag. I know Erica as well. And just trying to soak this up and listen more than anything else. Appreciate it.
Great. Well, thanks for joining today, Monty. And Nicholas, you just want to introduce yourself very quickly? He might not want to introduce himself. All right. Maybe he'll introduce himself at the end. Let's go on to the next presenter, which is Robert Hosford. Robert, take it away.
Okay, thanks, Steve. Again, Robert Hosford, Executive Director at NCOSAFP Finance Authority. kind of share with you how we got to where we were or where we are now. We kind of got the inside phone call from the national office and the state office that this was coming down. So I began real quickly to assemble a team. And what I did was went out and hired two of my former branch chiefs that retired from me at RD when I was at RD, and asked them to come on board and help us write the grant and deploy it. So we have somebody in the far west out in the mountains and somebody in the far east next to the coast, both with 35 years plus experience with RD programs. So they know this stuff. They know how, and they know the people. They know how to build things. Our project, we took down $15 million. Going into the grant portal, we were already subscribed at $22 million. So that was one of the trigger points that RD was looking at. They're somewhat hesitant to give money out to folks if they can't demonstrate their ability to use it. So we had a pretty good little pipeline. Here's where we got our pipeline. During COVID, the commissioner of ag here in the state, he was giving out grants for meat processing. And these range between $350,000 up to $3 million, $350,000 up to $3 million. I asked the commissioner, I said, will you give me your list of the ones that you think you're going to fund and let me come alongside you with the 15 million? And they agreed to that. And so that was where we found our initial universe of potential clients. We're going to the street with 4% fixed rate, 15 years or useful life of the equipment, and then 30 years on real estate. One thing that we thought we knew, but we were correct, is you can blend that loan. And RD likes a blended loan because it's easier for them. I certainly know during my time at RD, if I could see a blended loan on the B&I side, I would always think that that's just easier for my career colleagues. Our at fee is one quarter of 1% at closing, so we're relatively inexpensive, and it gets worked into the loan, so there's no money up front. We've done precious little marketing on this because we already had that $22 million worth of business laying out there, so we didn't really have to market it because Mr. Trotzler gave us his list, and we knew where to go. We have a minimum range of 1 million, a maximum of 5 million, and there's a reason behind that. We are hesitant to make a whole bunch of $100,000 loans because then you have to service that loan and it becomes an FTE issue. The $5 million range, top end of it at $5 million, we knew that the Smithfields wouldn't come for $5 million. And we have Smithfield just down the road here in Tar Heel, North Carolina. So we really put that $1 to $5 million range in there to kind of keep it small, kind of keep it in the family size range. The top end limit for RD is 10 million, but we went lower than that. We're not offering no new starts. This has to be existing business. I need to look at 3 to 5 years of your P&Ls to make sure that our money is going to the right place. Inside of our building, once we get a originated and underwritten loan, which we do ourselves, we'll take it to our loan committee, which is my board of directors that are much like, it sounds like Missouri, I believe, the lady from Missouri, where we've got governor, president pro tem, and speaker of the house. So we've got 11 on our board, but inside of that, 5 people are on our loan committee for meat processing. We're also, when we do our deep dive with our potential clients, we're asking them, where are you getting your animals from? And we're trying to keep it local. We're trying to make sure that we're not bringing, hogs out of, or cattle out of the Midwest. We're trying to process for folks right around us. It's not a barrier per se, but it's definitely something that we put on our scorecard. Additionally, something else I would encourage the other states to consider, which we're doing, is we're partnering with other banks and farm credit. And here's what that means. So let's just say there's a $10 million deal out there, and they have to come with 20% equity. We're taking 4 million. Ag Carolina is taking 4 million. Now we're at 4%. Ag Carolina is north of 8. Let's just say a nice round number of 8. Well, that's going to bring that total loan for that producer down to 6. Until that variable farm credit comes down, then their rate's going to come down too. And one of the reasons that we're participating in trying to work with our farm credit partners and other banks is that one thing that the federal government does not like to see is for the feds to push out private or traditional lending institutions. So we did not want to be in competition with, we wanted to be in concert with. And so of our 4 active projects right now, one we're working with an outside bank, then the other 3 all received Mr. Troxler's grant money. Now, when they came to us, these other 3 entities, we said, that's great that you got $2 million, but what else do you have in the form of collateral? Because grant money is great, but grant money tells me that you got a free chunk of change. Are you going to put the 87-acre hay meadow up as collateral as well? So pretty much everything for us is inside our building and with our loan officers. And they work together. They live, I would say, distance-wise, probably 7 hours apart from one another, but they can meet in the Piedmont region of our state and they can trade files, and they do that fairly regularly. But so far, so good. It started slow with sans marketing. I worked with rural development to not blast this because we do have a book of business we could start with. But, you know, we have to be very mindful of what does the staff look like in 10, 15, 20 years? Who's going to be servicing these loans? And so that's one of the reasons the blended loan reduces that 30 years down to something less. And it's on a sliding scale based upon how much money you're taking down for equipment versus real estate. And if they're existing, they should not be taking down a whole lot of real estate unless it's going to be for truck turnout or for capacity to hold the animals. So that's kind of where we are, Steve, and we're going full guns. And unfortunately, it doesn't sound like there's going to be another round of MPILP in the foreseeable future. But I would tell all the folks on the phone, look into the ILP, intermediary lending program, because there's tons of opportunity out there. And Artie is really, really keen on using that. And there's one reason: they don't have the bandwidth. They need to use secondary partners to move their money through the system. So I'll wrap with that and take any questions at the appropriate time. Thank you.
Excellent presentation, Robert. And you guys are going in 100% different direction that we're going to go in Maryland, because we're focused really on startup operations. So kind of interesting the tack you're taking. Does anybody have questions for Robert at this point? Okay, well, we'll have that group panel at the end, so keep thinking about questions. And very pleased now to hear from Brian on your program, which I think has been around for a while, but you're going to tell me where I'm wrong in that, if I am. Brian, please proceed.
All right. Well, thank you, Steve, and Robert, Mary. It's good to be with you on this panel. And it was a good setup when you said you're going in a different direction. What Robert's going, because I think we're kind of a blend between the two here in Kentucky. And I will get into the meat processing, but we'll give just a little history of our program, as we're our funding source and a little of our structure is unique. And for some may on the call may not be aware. I'm going to attempt to share my screen, because I actually got a few slides that Kara had made back when she still worked on our team. So if you know she made them, you know they're better than what I would have had. So let's see, Kara, if I can share my screen here.
It should be able, you should have access to do it.
Well, I don't know what I've got going on here. Maybe too many screens. Do you have a copy of them?
I can pull it in the next 2 minutes. Give me a sec.
All right. Well, I'll go ahead and set us up while Kara's getting that. And I don't know what my problem is today on doing that. I think I've got it, Kara. Hold 1 second. All right, did those come up for anybody?
They're up, Brian, but it's not full screen.
Not full screen, okay.
And then you just need to, from beginning, it should start it.
All right, they're full screen on mine, so I don't know what I've messed up on this. All right, let's skip that. I'll just tell y'all about our program. So I think we can do that. Sorry on the
Well,
slide.
Brian, we can see it. You can just run through what we got.
All right, so y'all can see there on that
Yeah.
one. It's okay. I think I've got too many screens going on here. So we're set up, as I said, a little bit different. Let's go back in history to the late 90s. Tobacco has always been king in Kentucky. It's good to have my colleagues from North Carolina, as you all were once more dependent upon tobacco than we were, but actually did a great job of diversifying away from it prior to us doing that. That was actually my master's thesis, was looking at what you all did in North Carolina versus what we should have been doing in Kentucky on doing that. And it actually took a paradigm shift for us to really change what we were doing in Kentucky. And that happened in the late 90s when we had the master settlement agreement. That was the biggest civil litigation in our country's history, to where we all 46 of the 50 states were suing the tobacco companies for healthcare related costs that were associated with cigarette consumption. And so at this time, Kentucky had more than half of our 90,000 farms. So we were over 50,000 farms in Kentucky were raising tobacco. It accounted for more than 25% of our ag receipts at the time. And not only was that a big driver in our agriculture, but overall to our rural communities and across the state for what this was happening. Our leaders in agriculture and other folks knew that we were going to have a paradigm shift in the tobacco industry in our rural economies. And so they set forth a portion of these funds, actually a significant portion of these funds, up to 50% of these funds, to go back out into the state, to both the state level and to our individual counties, under the mission of trying to diversify Kentucky agriculture away from tobacco and to grow net farm income. So with a mission of creating other enterprises, encouraging other enterprises, and creating markets for our producers. So this whole program has been evolved over time since the original creation. We were put under the governor's office and we operated there for 21 years. Legislation in 2021 moved us over to the Ag Commissioner's office, and we have tried to make that as a seamless move as possible to our recipients and to our borrowers for that we work with. And we're two years and a bit into doing that, and it's working so far. But this past year, the funds that came into our General Assembly from the Master Settlement Agreement, and all states get this, it's just very few are actually allocating it back out to agriculture. With us this year was $118 million that came into Kentucky, and of that, 50 million went back to agriculture. Now, over time, there's been a few what I call above the line deductions that have come out. Our farm to food bank program, where we're buying seconds of produce that again, creating a market for our farmers, and then also feeding the needy on that. Division of Conservation gets 3.4 million off the top. 900,000 goes out in direct aid, and then the remaining 2.5 million goes out in cost share programs. And we added this year another $500,000 out for rural mental health and suicide prevention. So $45 million comes over to my shop with the ag development funds. Of that, 16 million goes out to the counties for county level programs, and then just right under 30 million at the state level to run our state level programs and what we have going on there.
Hey, Brian, real quick, you're still on the main screen. Hop down a slide, and that kind of what you're talking about.
Okay, so apparently it's not advancing on what we're doing. I'll tell you what, let me try one more thing here.
Just click the down arrow. I think it would go.
Well, let me see if I can get it to where the format will be right.
And if not, I can share the presentation.
Have you got it now? Go ahead then, Kara, do that. So
It'll
that's where, yeah, I like looking at all the boxes, at least who I know I'm talking with here. So that's how we were initially set up. But this original legislation that set us up really laid out no template. Jill made the comment earlier in hers that they're driven directly by the legislature. We are not. Our legislature set up this board and wanted it to be autonomous, wanted it to be apolitical, but with continued oversight from our legislature. So all of our stuff is embedded in guidelines, not regulation. So we're able to have some flexibility for how our programs are administered and set up, and it makes it very quick. And I'll talk about that in a little bit when we get to the meat processing part. But early on, as we tried to do a lot of different things and had a lot of trial and error on what do we need to do and how do we need to get funds out the door. And over time, we had an evolution of things to know, one, we need our applicants to have skin in the game. So the majority of what we fund, we do only up to 50%. So we want some of the other funding coming from direct contribution from the applicants or some type of leveraging of federal funds. And Robert, I appreciated your comment on earlier about making sure we've got more than just one other grant. We need to have all the pieces in place to be able to administer these type of programs. But in the early days of getting this set up, we knew that there was going to be limited access to capital that our producers and especially our beginning farmers were going to have. So they set up a portion of these funds and established a loan fund. And I am extremely thankful to this day that they had the foresight to make this a participation loan program and not a direct loan program. Because again, back to Robert's comment, as you add loans, you got to start servicing loans. And I'm an old banker, and I can tell you either spend your time generating loans or you spend your time servicing loans. And we have a pretty small shop. And so we would not be able to do this without having our partner lenders. And we use anybody in Kentucky as long as you have a presence. It can be just a branch, one branch in Kentucky, but as long as you have a presence in Kentucky. Any of our farm credit systems, we have 3 in Kentucky. Any of our commercial banks, community banks, area development districts, economic development districts, anybody that's willing to do the participation piece of that loan. We have 5 different loan programs. The original mission started off again for beginning farmers. So this program was set up to both would allow you to buy a farm, but also we're set up, you can buy into a going concern. So if you have a multi-generational, multi-family member farm, one person wants out and another person wants to be buying in, we can come in and help secure that. The majority of what we do are farm purchases, but we also can do other programs with that as well. With again, that makes us unique, being able to buy into the going concern. So then the next program we've got is the infrastructure loan program, and there you go. Here's our list there, infrastructure program, and that's exactly what it sounds like. That's any type of structure that's on the farm that doesn't include the land and it doesn't include a primary residence, but anything else would work for that one. Our ag processing loan, that is anything that we're doing to add value, creating beyond, the terminal market for some type of product. Diversification through entrepreneurship and agribusinesses. That one, I think they thought of the acronym first. They want to deal and then work their way back into it, but that's for our ag businesses. So that would be anybody that's in business for profit, but is servicing or providing some type of services to our farmers. And then one that I know everybody on the call in their states are probably dealing with is the shortage of large and food animal veterinarians. We've got a program on the books that allows us to help a veterinarian either build a practice, buy into an existing practice, buy equipment that is specific to large and food animal veterinary practice. And that one, we're seeing more and more interest in that, as we've also launched a grant program from the other side of our shop that we do on grants. So of these loans, let's go back to that slide again, Kara, back there. All these loans have the same underwriting terms or I guess loan structure terms that we'll do up to 15-year loans, 25-year amortization, All of our loans have had the same price since our origination. Again, an old banker, I used to live and die by the 10-year treasury. Now I don't have to worry about it because all of our loans are priced the same. We put a 2% rate and then allow the participating lender to put a 75 basis point servicing fee on top. So the loan to that borrower is 2.75 fixed for 15. And again, I'll take that up to 25-year amortizations. Okay, go on to the next slide there. All right, processing loan. Again, it can be very very broad definition of what we're doing. There's 3 examples on there, from buying milk from producers, making cheese. We've got another microbrewery that's buying grain and hops and from producers here in Kentucky, or then big projects like our biodiesel facility and right on the river in Owensboro and Davis County. Our loans on ag processing, we don't have a set amount we'll loan up to, except what we're capped at by statute. We can't do anything more than $5 million. In Kentucky, Owensboro Grain received the full $5 million, but other programs are determined by the board based on amount of producer impact. Like a cheese creamery that they may be buying the majority of their milk from themselves, and if not buying from a lot of other producers, may be capped compared to one that is sourcing all of their milk from other producers. Diversification through entrepreneurship. I know we talked earlier on some of the other programs about on the tax credits of adding net worth restrictions. We had those when I initially came on board here, and we worked to take those off because, again, our funds are here to create innovation and to grow overall farm income. So we did not want to make anything that was capped and prevent good ideas in Kentucky. And the 3.5, when I challenged how that was established, it was purely arbitrary. So and I struggled with that. So somebody at 3.49 million net worth, their idea was good, but somebody at 3.51, we don't want to be part of it. Couldn't come back with any type of quantitative number why we had that. So we pulled that off. And that's the way I want to be. I want to be open to every person in Kentucky that if you've got a good application, we can vet it. And if it's going to help Kentucky agriculture and help Kentucky producers, then we want to be part of it. And back to the comments earlier, we don't also want to be competing with our participating lenders. We want to be here to be that project. We take the subordinate position, so we're going to be in that position to help shore that collateral up, and then also help that cash flow with our below market interest rate. So that's where our board is settled right now. We're seeing more and more demand with the increase in interest rates, and I could see this coming. But our deal program or our ag business program, we do put in some requirements here that you've got to have a developed business plan. We also like to see, for a company that's been in business, that you have been able to be profitable 3 of the last 5 years, and we ask that you have a mentor that's going to assist you with the program. And we've been very successful with those programs to date. Do we have the slide there on the beginning farm program, Karen?
No, we don't.
Okay. So the beginning farm program will go up to 50% of the project to $250,000. Requirements there differ a little bit from FSA's definition of a beginning farmer. We're a little more accommodating. We can work with somebody who truly is a beginning farmer. You don't have to have the 3 years of Schedule F or the documentation to require that. And one of the reasons we took that off is, again, we want to be providing a path for folks that may be knocked out of access to capital on others. We have a good process with our participating lenders. They're doing a good job. It's got to meet their test of credit, and it's got to hurdle their underwriting. So they're doing a good job on what they're doing, but there may be great cases where we can go ahead and work with somebody before they've got that 3 years of history. We also had a net worth restriction or a cap in this program at $900,000, and we were seeing as folks were transferring out because often I will say all the time, a beginning farmer is often a young farmer, but it's not always a young farmer. It can be somebody that's transitioning from another career. It can be somebody that we have a lot of military, 2 big bases in Kentucky that will a lot of times we'll see our veterans that will retire and want to remain in Kentucky, and agriculture is a path they want to pursue. And so we have folks that are taking advantage of that. Ours, our net worth limit in the beginning farm program, it did exclude qualified assets. So your retirement accounts, like we talked about earlier on one of the other states' programs, those were backed out, but it seemed that that was confusing, and folks were self-selecting themselves out of the program, thinking they wouldn't qualify because they're retiring and had some money in a 401k that would have been backed out of the program. But that's the beginning farm program is the bread and butter of our program. It's about 2/3 of the loans and about 75% of the assets under management that we have. And to date, we have had over 186 million loans and over 1,300 loans originated. We have about 800 on the books right now. Okay, our ag processing, meat processing. Again, I said we're driven by board level direction. And something everybody on this call noticed during the pandemic in the spring of 2020, folks went into the grocery stores and saw something for the first time that they may have seen, and that was empty shelves and empty meat cases. And this increased demand for custom processing, folks wanting to put some of their own animals in their freezer, and then also for additional retail, to where our producers could actually process their own livestock, and then if USDA inspected, could turn around and resell this. So we saw a big demand. Demand got so bad here that our existing meat processors were seeing a year wait on folks coming in. And a pure example of capitalism at work, I learned that these spots that you may have on a person's or a processor's calendar could actually be sold. So, and if you were expecting to see Kara show up with her heifer to be processed, you may end up seeing Brian with a cull cow show up and say, "No, I bought Kara's slot that she had with them." I thought that was just fascinating. But our board set forth a new program for meat processing expansion. And the first thing initially was just for expansion of existing facilities. A lot of times that limiting factor might just be freezer space. And so we were wanting to do some cost share and some grant programs to help folks expand. But over time, this moved to new facilities to bring new ones online. We've identified there's about 80 processors in Kentucky that we've been able to find. And we've been able to be involved with 42 of them to date. And Kentucky is a pretty wide state when you start, especially when you start traveling it. But I love this one because it has literally spread the state, going from far west Kentucky to far east Kentucky and everywhere in between. And we feel like we've raised our capacity significantly. We think will be about 35 to 40% increase in capacity by the time all the new constructions get in line. And again, these have been small projects where we may just be buying a piece of equipment, and others have grown to be several $1 million projects, and us having up to half of the money in there in a combination of grants, forgivable loans, and participation loans. And that was why I asked the question early on about lifetime limits, because we're starting to see some reoccurring customers and trying to figure at what point we're going to say, okay, we got you started. We're now helped you get some financing. Now you need to be on your own with it. And we haven't established that. One very unique piece of this program that we've got out now, and we're over $8 million now that we've put into these different projects across the state, is our board is historically been governor appointed. Now they're ag commissioner appointed, Senate confirmed board members, and they really bring a lot of expertise to the board. But one thing they recognized early is what they didn't know, and that was much about meat processing. And so we brought in external consultants that we would have our applicants meet with to help get in there. And I had to actually kind of work and soften them some, because we were getting feedback that they were coming in asking tough questions and really were tough to work with. So I got in on some of these startups and would tell them, all of our goals are the same here. We want you all to be successful. We don't want to help you get in a situation that actually puts you at jeopardy with other projects or businesses you have going on. And so we want these consultants in asking you the tough questions, because there's a very good chance at this point you don't even know what you don't know about meat processing, especially for these startups that just have an idea and without having any of the technical training or not. So I often would open up with a joke, telling them this guy's not here to get on your Christmas card list. He's here to help you be successful. But another program that we fund directly with our ag development funds that were a tremendous partner on this project was the Kentucky Center for Agriculture and Rural Development. And they're a group of consultants that will work with producers. Oftentimes, unless they're doing feasibility studies, they'll do it for no charge because of our funding and other funding they receive at state and federal level, but help them put together, develop very detailed business plans. So it helps our board be very comfortable with making these credit and grant decisions, but also able to use those with their other lenders from the commercial side on what they're doing. So been very successful. We still have 2 in the pipeline that are under construction, and then we'll have them all up and going. My big concern, as you saw the map I just had up there, is we're not putting too many on top of each other and that this demand continues. So far it is, but the waiting list that we have got as far as taking a full year now to get an animal processed, it's slowed down considerably. Everybody's still busy. They're still all working, but you can get your animal in a lot quicker. So that's in a nutshell what we've got going on at the Office of Ag Finance and Ag Policy, and happy to take any questions as we wrap up all the speakers, Steve.
Brian, very informative, and I want to acknowledge and recognize your point on loan participations being the better way to go from a staffing capacity. We're in the process now of converting our main direct loan program, our partnership lending program with commercial lenders, from a direct loan program to a loan participation program. And Bill and other members of your staff have been very helpful to me, as have Ryan Rolls and Tammy Nabala with their loan participation program. So excellent point. And we're hoping to reduce our staffing need by about 50% over the next few years by switching to a loan participation model with our partnership lending program. With respect to livestock processing, does anybody have any questions for Brian? So North Carolina mentioned that they're only going to fund existing processors. We in Maryland are targeting our loan funds to trying to stand up 2 new processors in underserved parts of the state potentially. We may well fund a capacity expansion project. We also had during the pandemic significant federal and state pandemic adjustment funds to help expand existing processing capacity like you were doing, Brian, in Kentucky. Let's get Robert and Mary back on to answer questions that anybody might have about any of the 3 states' livestock processing program. So Brian, you're suggesting that your program is perhaps starting to wind down. You've been offering it for 3 years now, or you think it's just going to keep going strong?
Well, I think we have changed where it was a advertised program with a designated pool of funds. We have now sunset that, and we exist as an application taking agency. So we take great applications every day, take some that may have the potential to be a great application with help with some of these consultants and outside resources that we can bring in. So we're still looking at them, but I guess we're not signaling bring us as many applications without the designated pool of funds. Ideally, from this meat processing subcommittee of the Ag Development Board, they want to see these get online. The 2 that are left are for Kentucky, good size processors. They have limited, while initially the first round of funding did include custom processing. Now we are not doing anything unless it's USDA inspected, and we are also pushing a drive to get GSFI certification as well.
Can you explain what GSFI certification is for those that might not know?
Global Standard Food. I don't remember what the I is for, but it is the higher level beyond USDA inspected. If you're wanting to be in the the big retail, you're going to have that level, and it's additional compliance and additional oversight.
Very good. So Robert and Mary, are you all funding custom exempt operations in your loan programs, or will you? Is there just USDA inspected or state
no.
inspected?
We're doing both. So with, I forget the act that allows the State Department of Ag to partner with APHIS and FSIS. If they are custom inspected, that's fine, because that's actually meeting the federal requirement. But some of these are already USDA inspected.
Mary?
Yes, as long as USDA does, as long as they agree with us on the, eligibility, we are doing custom exempt, state inspected, and USDA facilities, but more than likely, most of them are USDA. But I do have a couple custom exempt and they're eligible, but I had to get USDA's concurrence on that. So with the custom exempt and the retail, they don't want them having a retail facility, I'm finding out. So there's just a few things with that. So I learn something new every day. So.
And
Okay,
Steve, GSFI, it's Global Food Safety Initiative. So that's theirs.
Okay. Good. I learned something today.
And one of the things that I think in Kentucky, and Brian, you of course jump in on this. We also in Kentucky, they funded, startups, and I'd hoped to get on today one of those startups. They were unable to join us, but Farmstead Butcher Block was someone who never been in processing before and started from the ground up. And Brian can maybe share a little bit more, but they took a very unique approach with a mix of grants and loans. And Brian, I believe they've come back for another loan, and that's where the like ag processing and other Kentucky Ag Finance Corporation has really been able to step up. Some of these organizations got a grant first time around through the Ag Development Fund, but when they came back, they were shifted more to the loan side and using existing programs like the ag processing loan and deal for those. And Brian, I'll turn it over to you, but that's just one of the things I think Kentucky's been unique on. And Farmstead Butcher Block is just phenomenal. They were actually highlighted in our winter newsletter that was front page. So I'll share it with everyone on here in a little bit.
But we featured it in our annual report last year too, because it is a great story. This was one of these startups that the gentleman that opened this, and it was his wife's project she wanted to do, but he had a very successful trucking business and was getting into this. So here was somebody that had a track record of success, but not in this specific business. And so he got started, and the way we structured our program is each of our counties are allocated money at the county level. If you remember the first flow chart we had on there that came out, and it was all tied to your county's historic tobacco dependency, how much tobacco was raised there, but yet how important that was to the economy. If it was a more rural community, would actually have a factor that would bump it up, that would get you more money than say like Fayette that has Lexington, Kentucky, in it, a bigger metropolitan area. The county funds, when they invested in these projects, that was a pure grant. Our state funds, we funded as a forgivable loan. Now the hurdle to earn loan forgiveness is pretty low. You just got to keep the light bill paid. You got to keep the employees on. You just got to stay in business. So if you're 5 years in business and you're still processing animals, no strings attached to whether you're doing custom or doing something else, because we've had some that have changed their business models, may have been doing custom and then realized that's not working for them and going a different direction. And that's a belief by our agency that, again, we want to be catalyst that gets this project going. But, if we're 15% of your business, we don't need to be dictating how you run business, especially if you're showing us that this isn't a successful business model for you. But ours, they'll earn the forgiveness, and that allows us to perfect our security. And in advance of a complete liquidation, we might get some of our funds back, and then to have the accountability for our compliance. You want to earn your forgiveness, we need some detail of how many animals you're processing and how many you're going through. But back to the Farmstead Butcher Block, they did the grants those, and then we filled up the gap up to 50% with a participation loan with their banker. And one of the unique things with theirs is many on the call will be familiar with Dr. Temple Grandin, who's does a lot of work with animal care, and she actually helped had some consulting and input on their knockbox, and is honestly the most humane way you can harvest an animal with the way they do it. So it's a very progressive story, and then they also have a really good retail division too. So we're seeing a bigger market created there where farmers are able to sell other farmers are able to sell through their retail space as well.
Very good. Do we have any other questions for our meat processing loan panelists? Well, Robert, Brian, and Mary, we certainly want to thank you for your very excellent presentations today. This has just been terrific. I've learned important things. If you had, well, before I let you go, if you had, one thing you would change about what it is you're doing relative to making livestock processing loans, what would that be? Or do you know yet in the case of Mary and Robert?
Yes, and I fought this battle and I lost multiple times. Inside the ILP, as a general statute, RD, unlike FSA, won't let me go to the street and sell that loan. Like I sell my farm loans that are guaranteed by FSA, they refuse to let that happen. And it's kind of counterintuitive because they want you to have a healthy healthy revolving loan structure. Well, if you're taking down your money in 10, 15, 25 years, 30 years, you can't build up a revolving fund that's going to be very effective. And so I fought that battle even at the general counsel's level for USDA, and lost summarily on every count. so RD kind of hamstrings themselves and us. And that's more of a discussion to have with, the farm bureaus of the world. But if I was able to take a $5 million loan and sell it on the secondary market at 10 to 14%, I get that money right back, and then I can start pushing more product. But that's my one gripe with my former colleagues at RD.
It's my understanding with this loan program now, even though we have to keep it internal to us, that eventually we'll be able to use the funds more broadly beyond just livestock processing. Is that your understanding, Robert? Eventually?
I don't have understanding either way, but this is all underneath the umbrella of ILP. And I haven't looked at the reg, but I don't see why it couldn't be. But we would definitely want to get some guidance and concurrence from my attorney down in Atlanta, Miss Green. She'll tell me the yes or no on that one. I would think that would probably make sense, but asking for concurrence. And once I get a critical mass of money, I will be asking that question.
Right.
And Steve, that's the way we've shied away from that as well, because of this. We don't have the bandwidth to handle these things in-house on what we're doing. So and at the time when we first started looking at it, we were not having any issue with funding. In fact, when I got here, I started in 21, and our rate was attractive, but it wasn't that attractive when a lot of these, especially community banks, were flush with cash from a lot of the PPP loans were still sitting in their customers' checking accounts, and they were trying to figure out ways to get out the door. So we were kind of getting creative with what we were doing. That's one of the reasons we took off those net worth caps, and we were getting about $1 million in new requests every month, and that was about what we would have returned based on return of principal and interest each month. So we were pretty much funding what we had coming in, and now I'm still getting about that same $1 million back each month, but the last few months it's been between 3 and 5 million. So I'm going to have to get some funding somewhere. We're going to continue this demand.
I hear you on that.
And I guess my takeaway too on that, to echo the comments we heard from our first three on the panel, is a simplified structure. That has been the success of this program, and I've been holding the line pretty tight since I've been here about not making deviations. We got pretty easy hurdles to get over for underwriting. But if we start making exceptions, that's where you get in trouble. And I will speak to all my predecessors here that have been before me at the Office of Ag Policy, and especially the ones involved in this, because out of those 1,300 plus loans and 186 million in loans that we've had out, we've only had 4 losses in our history. And I've loaned a lot of money at a lot of other places, and I've never had that good of a track record.
Yeah, you guys have done amazingly well, as has Minnesota. We take a little more credit risk in Maryland, so we've had percentage-wise a little bit more loss than you have, but we're right at the $100 million mark now after being in business for 16 years. So, all right. Questions? Final questions for our presenters? Hearing none. Kara, I think wants to. You have a question? You want to start the closeout?
No, well, I was going to say that just ask everyone, if you didn't register in advance, to please sign in on the chat with your email. We will do a follow-up email with contact information on our presenters, for each of our presenters, in case you have questions that you want to ask them later, or you want to ask more about their programs as you're developing programs. So.
Right. Well, as we head towards closing, I again want to thank the 3 panelists who just spoke on the livestock processing panel, the 3 panelists on the tax credit panel. Just great information. And Kara, I want to thank you for organizing the seminar. It's something we're going to keep doing occasionally, every year, maybe twice a year, in addition to our annual conference. The last one we did was also very well received. So keep your suggestions coming for ideas and your educational needs. And with that, I know Kara's going to send out information on the NCO annual conference for everybody that participated today. And we hope to see many of you in Raleigh in October. So Kara, unless there's anything else, I'm going to adjourn this meeting and say thanks again to everyone for their participation.
Thank you, Steve.
Thank you. Take care, everybody.
Thank you.
Thanks. Bye.
Thanks for everything, Tammy.